The event platform provides the ability to rate sessions and even for you to ask questions during the presentations. Someone will be there to either answer your questions or will get back to you with an answer at a later stage. On the event feed itself, please like, rate, and comment on photos, videos, and polls. You can also create your own posts. Now, this is very important. You must click on the Leave button after each session to qualify for CPD points. Remember, you must click on the Leave button after each session to qualify for CPD points. Now, this virtual conference platform will be open until the end of November if you still like to view any of the presentations you were not able to see. However, you will only be able to get CPD points for the live sessions you viewed. So live counts for CPD points. After November, all the videos will be available on our website. That's momentum.co.za. Next we have a panel discussion moderated by Letshego Renkin, who is the Executive Head of Institutional Distribution at Momentum Investments. She'll be asking our panel from South Africa, the Netherlands, and the US what they think are the key trends and priorities shaping the conscious investment manager of the future. The panelists are Saunderson, the Chief Investments Officer at Momentum Investments, Mutlanyane, the Head of Alternative Investments at Momentum Investments, Deon Hugo, a Senior Director at Willis Towers Watson, Nico Marais, the Chief Executive Officer at Wells Fargo Asset Management in the United States, and Malick Badjie, the Managing Director and Head of Africa Distribution at Robeco Institutional Asset Management.
Thank you very much, Dan. My name is Letshego Renkin, and I'll be hosting this panel for you. We know that the value of an investment is no longer just about the returns. Many investors are also ensuring that their money is deployed to strategies with an ESG focus, as they also want to ensure that they make a positive impact on society. Now, as an investment manager who wants to remain relevant in the future, it is therefore critical that we evolve as an industry as it relates to our process, culture, way of work, and socially responsible investing approach. And hence our theme today with specific focus on conscious or impact investing. We have a great panel of speakers who represent a broad spectrum of skills around the globe and locally. Today we've heard a lot of discussions around scenarios, recapacitation of the state and the economy, and the variety of investment opportunities and innovations. We therefore want to use this panel to get a view of trends, priorities for role players in the value chain, and how we start integrating these into practical portfolio management for the future. Now, introducing our panelists, our global speakers, Malick Badjie, MD and Head of Africa Distribution at Robeco, based in Netherlands and also Dubai. And then, of course, we've got Dr. Nico Marais, CEO of Wells Fargo Asset Management, born in South Africa and now based in San Francisco. Both of them will give us insights on how they see their investment models and approach evolving, and with a specific focus on investing with a conscience. So Nico, Wells Fargo has invested heavily in building a solution capability. How are the client demands and the tools you're using evolving to meet these needs?
First and foremost, thank you very much for inviting me to speak. It's a great honor, to be talking to South Africans, and I do miss you guys. First and foremost, before I get to solutions, which is often a sort of overused words, we run our firm based on 4 outcomes. Very simple, and they are the following questions. Actually, is how do I protect wealth? Think of my dad, that's 87. How do I manage his money in a way that is consistent with his age? He really doesn't want to lose money. Secondly, how do I grow wealth? Think about the younger generations, the millennials. What does responsible investing look like? How do we accommodate their needs and also grow their portfolios? Thirdly, how do I pay income? And I'll come back to it. It's such a problem for us globally, given the cut in dividends. How do we provide sustainable income to our investors? And then the final, and this is one of our 4 pillars, how do we do good while achieving the first 3? And we've deliberately picked the word doing good rather than ESG. And I think you all know, there could be strong views for or against the term, but no one is against the term doing good. We all want to do good. So we find that a very powerful driver. As it relates to solutions, I would like to make it's overused, but let me give you some practical examples on why we've shifted this way and what it means for our clients. It means that as a firm, we're moving from being a pure product provider to solving the problems of our clients. Think about our clients, and it doesn't matter if they're in the US or in South Africa, they're struggling with portfolio construction. The role of bonds. Bonds are at zero. And for those that are investing overseas, what's happening to a 60-40 portfolio? What's happening to risk parity? How am I going to defend myself if the market collapses again? You have not heard the word product once. Think about ESG and the questions we have. How do I do good? Do I invest in an ESG fund? Do I give money to Greenpeace? Do I give money to an activist fund? How do I think about money alpha and social alpha? How do I measure doing good? And so shifting a firm to answer those questions, I think is profound for us. It does not mean that our portfolio managers are not important. They're still the critical building blocks and drivers, of this approach. But I do believe, from a US perspective, that the market is moving to your ability to satisfy the needs or outcome from your clients, and therefore translating what could be a simple fixed income product into a long-term income product, or taking a global equity fund, for example, something we're doing, and turning it into a 2-degree fund. And so I don't think moving to a solutions-oriented approach should be a surprise to anyone. It is simply trying to satisfy their needs. And conscious investing, I thought about what you've said, is not only about the ethical side of investing, it's also being honest about your ability to deliver 4%, 5%, 6%. It's being honest with your clients on the limitations we have right now on diversification. That's part of ethical investing. That's part of what we as investors should do, to create an industry that we can be proud of.
Thanks, Nico. And now to get to Malick for him to give us a perspective. So Malick, as financial engineers with a well-known reputation for ESG, what trends and priorities are you focusing on?
And just on behalf of Robeco, thank you for inviting us to the panel. We're truly delighted to be partnering, continue to partner with Momentum, and it's a great opportunity. I hope also with the whole crisis and the situation, everyone's families are well. It's an interesting time, and I think it's important. From a Robeco perspective, really, the trends we see prior to COVID haven't really faded away. I mean, the trends that you've seen in terms of fee pressure in the industry, the trends in terms of passive investing, the expected returns for the coming years, and the expectation that they will be lower. We've seen that over the last 10 years, so those trends have really not shifted in any shape. But one of the key elements which we're focusing on, and the trend that I think is the most relevant in our view, is really around sustainability. It's become clear that this is the most relevant issue that we have today as it stands. Obviously, if you take a step back and look at the news and the information that we're seeing in COVID from a climate change and the CO2 emissions, you realize that we really have to act now. And now some of the broader issues that have been at the back end have now come to the forefront, from economic inequality, for human capital development, the issues of diversity as well. So really the COVID crisis has not more or less, it's just brought to forefront some of the issues that we fundamentally believe has always been relevant. We've had a history at Robeco. We've been a 91-year history, and for sustainable investing, we've been a key component of part of our investment process for 25 years. But we think never has there been a greater period than now to really tackle that. So how are we taking advantage of it? Essentially, we think fundamentally the framework and the priorities have to shift. We as asset managers, fundamentally have a fiduciary duty clearly to maximize return and reduce losses. But we fundamentally believe sustainability also helps to fulfill this duty. On the one hand, we fundamentally believe sustainable development is the pathway towards the future. Companies that are sustainable leaders are therefore really going to be likely to be winners of the future. So for us, really, as we look at our priorities, we look at it from the lenses of sustainability investing. And if you have to look at the evolution of the industry, it's really clear how important that has become. Look, for instance, for example, the renewable sector. 20 years ago, there were few investors that would put money into wind and solar energy, but this sector now is booming. Another example are impact funds. And also, for example, you see major oil companies writing down billions in assets, climate change becoming relevant. So for us, really fundamentally, the need for sustainable recovery provides a massive opportunity for investors to put money behind green and social goals. Money speaks. And the role of investors is to really direct capital towards companies that provide solutions for sustainable challenges. Really, for us at Robeco, companies that provide healthcare services, innovate and solve environmental challenges, really look at the issues of equality, for instance, and can play a really critical role in accelerating this recovery. This means it's all about sustainability investing. That is our fundamental priority.
So perhaps maybe you could share with us the current research priorities and why will this position you adequately for the future? And maybe just leading on to that, where are your clients leading you in terms of what is becoming more important for them?
Taking a step back, I mean, Robeco research has always been a part of our platform. We're a research-driven investor. We call ourselves investment engineers. For over 91 years of our history, research has always been part of our investment philosophy in our DNA. And research has always been defined within Robeco under the fundamental quant. But there's another component that's becoming more relevant. That's sustainability research that goes beyond the prison of what we call traditional investing in terms of research. Looking ahead for us, the science is clear. If sustainability is the way forward, we need to constantly recalibrate our climate and SDG and really understand what the issues are and how we can build that research. Because for us, fundamentally, from a research platform, we struggle with, and probably a lot of investment in the industry struggles with as well, is that the challenge that is to change the mindset in our industry that the Markowitz framework of investment, that climate and sustainability is also a key factor that needs to be taken into account. And so it's really fundamentally important from our perspective to really look at untangling the complexities of sustainability, which social, environmental, and economic factors are really indicative of companies that have the lowest risk and the highest likelihood of winning through sustainability. So for us, really understanding the key components of sustainability, the key factors around that are really playing a part to it. And if we look at our clients, what are they really leading us in terms of where they are? I think it's twofold. One, it's a very clear emphasis that government and regulators are taking a much more proactive approach around sustainability and ESG investing. We've seen over the past few years, governments and regulators have had significant, regulations around climate change goals, considering the best ways to implement sustainability targets. That increased focus from governmental organizations and really regulators have put pressure on the industry really to address sustainability and climate within their investment portfolios and opt into many initiatives which commit to them publicly. So another key component of that, as you've seen, and I think Momentum have been also a key champion of that locally, is through the UN's 2013 Agenda for UN Sustainability Goals. These are 17 Sustainable Development Goals. These goals were all adopted by all UN member states in 2015, and they really seek to drive global action across the social, environmental, and economic development issues up until 2030. We fundamentally believe this is it's really the North Star in investing. We think this is a fantastic framework to really look at investing from a sustainable perspective. And so a lot of our investors, the question they're asking us is essentially two things. One, how do we adapt with the regulations that we're having, particularly around climate change? And really, how do we integrate sustainability? And how do we really look at the UN development goals and the broader chapters around impact investing and incorporating it into our portfolios? And there we have various conversations with clients, but the clear element is the fundamental component is there's different flavors to how you look at sustainability. There's different applications to how you are. The fundamental element is understanding what your priorities are, establishing a framework, and really working towards that in framework and establishing a long-term goal.
Now, Motlatsi, starting with you from the South African perspective, South Africa is once again at a crossroad. There's a huge pressure on social compact and so many constraints and headwinds preventing actualization of these burning priorities. What are the current policy prerogatives at engagements between business, labor, and government? And what finds traction and where are the sticking points?
Thank you very much, and it's an honor to be part of this panel. Lesego, as you know, starting from 2008, following the GFC, there's been a significant change in general between what's happening in the investment space, what government expectations are from the general populace, and what the policy framework is within which we operate. We've seen a significant shift in asset allocation into the real alternative space. And the reasons for that are quite clear. Market volatility has been quite high. It's a low for longer environment from the interest rate perspective. And institutional investors are hungry for additional return. And this is where I think the pressure has been in terms of the change in focus. And real assets, or I should say alternatives in general, are good opportunities, present a good opportunity to answer some of these questions. Right? From a government perspective, it's been very difficult because, as you all know, that the South African government has found it very difficult to, first of all, articulate a coherent policy just in terms of infrastructure development, just as a start, right? And not to mention just in terms of implementation and actually just maintaining basic infrastructure. So there's been a lot of pressure points from that perspective about how we can actually get the ship moving, right? And to a large extent, the private sector has had to stand up on its own and try and fill these gaps where it's possible, right? And to a large extent, government has also played a part, so I mustn't be too negative on that. So if you look, for instance, at the renewable IPP program, which has been a significant success and has seen over 200 billion of private sector money go into a very critical part of our infrastructure. That's been a great success. And I guess it talks a lot to the success of the PPP program and what is actually possible to do in that space, right? So I guess that's one thing that we can tick off and see how we can apply the same kind of technology and the same kind of policy framework to other areas of the infrastructure space, right? Where we are right now is that, as you know, that there's been quite a lot of talk starting from the ANC 2017 conference about prescribed assets, right? And you can understand why, right? Because government has, I could say, to be generous to them, failed. They're obviously looking to see how they can access private funds to be able to do what needs to be done, right? Except that this is obviously quite a controversial policy. And us as Momentum Investments, together with the industry under CISA, have been quite vociferous in our opposition to this policy. We believe that there are ways that these objectives can be reached and can be achieved without necessarily going the route of prescribed assets. But thankfully, I can say that, at least if you believe what Enoch Konongwane has been saying recently, that government is now starting to, or at least the governing party is moving its focus away from prescribed asset policy to see what other avenues there are to be able to try and crowd the private sector in, which is, in my view, I think, a very positive development.
If you take it back into the client space, how you manage money, how do you think that would translate?
Well, I think the important thing to realize is that there have been significant structural changes, which I think the COVID pandemic and the lockdown has amplified. So as a result, it means that in our space, within the alternative space, and particularly within the real space, there are very clear opportunities and trends that we're identifying. Now, to give you an example of the kind of trends that we are identifying as trends that are on the up and will continue to benefit from these structural changes that I'm referring to. The first one is obviously infrastructure, right? Government has identified infrastructure as, to use the president's words, as the flywheel for economic recovery, right? So which means that they're going to try and make sure that they use all the avenues within infrastructure that they can to try and get the government, the economy back on the run. And the obvious beneficiaries of this will obviously be in the energy space, right? It will be in the telecom space, right? And we'll know also that social infrastructure in the form of healthcare and education also stand to benefit from that. Secondly, social impact investing is now, it was obviously a growing trend, a very nascent trend, but now it's obviously been accelerated now as a result of this. And then the last two, if I can just quickly go through that, will be the agriculture and the agro-processing space. We see this also, this is one of the industries that benefited during the lockdown, and we think that there'll be renewed interest in this space. And then lastly is obviously the integration of ESG policies within the within investment processes. I think that the lockdown and the current developments are obviously accelerating that. We, for instance, have obviously integrated these as part of our investment policies, and we think that it's only a matter of time before all managers and all investment practices have to do exactly the same.
Now, Deon, from your side, what are your clients' key priorities and how do they want investment managers to evolve to meet their changing priorities?
Good afternoon. I mean, I think, what are the key conversations that clients are having at the moment are really related to the poor performance that their portfolios have had over the last number of years. Specifically, you would probably be aware that the Johannesburg Stock Exchange is pretty much flat in terms of its performance over the last 5 years. So there's certainly a kind of a level of discomfort with the ability of the retirement funds to provide a good income or a good pension when people retire. That's probably kind of, I'd say, the most pressing issue. I think on a forward-looking basis, actually, the other issues that are sort of being discussed, obviously with our economy having been severely hit by this pandemic, and even before then having been under a lot of pressure, there's real concern about you talked about sustainability. There's real concern about the sustainability of our economy given its performance. So that filters through to things like the level of debt that we've got. It filters through to our ability to actually provide services and protection or social services to our populace, and then also actually just the stability of the political stability that we will have. Obviously, if our economy is leading lots of people to be desperate and destitute, then that filters through to the actual level of stability of the political situation. So I think those are probably the most topical issues, and then certainly it hasn't helped with a lot of the noise that we've had on the political front around things like, as was mentioned, land expropriation and even potentially prescribed assets. So it's actually quite interesting. It's a slight sort of contrast. Locally, we've got very low expectations baked into asset class returns or asset outlook. So our stock market is trading on relatively undemanding multiples, and that's because everybody is very pessimistic about the future, specifically South African Inc. And then you've got our bonds, which are also trading on by historical standards, certainly high yields, and that's again because everybody's worried about the sustainability of our debt. Internationally, it's quite the opposite. Actually, we've had extremely good performance by global markets, and certainly global bonds have yields have declined over time. So it's like the opposite problem there. We've got, let's call it, very prospectively potentially high returns if we have a reasonable outcome in South Africa, whereas globally, actually one could make an argument that financial markets are pricing in a very good outcome, or alternatively that you're just going to get quite low returns going forward from international markets. So I think, and the issues are obviously similar but different in the sense that globally we have a concern around obviously around the debt levels, geopolitical tensions, and also rising populism in a number of jurisdictions.
How do you believe a consultant will need to adapt and service their clients in the future, Deon?
You've got to try and be attuned to what your clients are looking for, but then also try and actually, I think, lead in some areas, in specific areas where you think you can add value to their investment outcomes. So I think, probably some of the areas where we putting in a lot of effort is on the sort of technology side of our business. So a lot, AI and machine learning and data science, etc., are fields where I think investment firms, investment managers are investing heavily, and I would say the same for ourselves. So we're basically trying to improve our ability to advise our clients, and a big part of that is investing in data and related technologies.
And Sonja, now from your side, as a leader of your investment team, how do you bring this all together? How do you build the right culture to create an investment team for the future?
I think the most important thing that's already been recognized, and something that Nico also echoed for Wells Fargo, is that right now is a particularly interesting time to navigate the DNA and the cultural alignment of investment staff. You know, there's a lot of sort of internal dynamics of way of work, working from home, a more flexible environment, how you support staff, how you make sure they stay connected, because we all sit in different locations. I mean, there's a whole lot of things from a cultural alignment perspective that makes investment management and investment markets a particularly interesting, sometimes challenging, but also a very rewarding place right now to work. So also just to echo a little bit of what Nico was saying about the wellness of staff, how you make sure they are involved in the processes, that they don't feel disconnected from a bigger picture. You know, you bring new staff in during periods like this. How do you make sure that critical DNA alignment and, you know, that cultural alignment of how you normally almost indoctrinate staff in terms of your philosophy and your process and your way of thinking, how do you solve for those things? So those are particularly interesting periods for us to navigate. When it comes to sustainable investing specifically, I think it is important that you very clear about what it is. What is it for you? What does it stand for? And what can you do? I mean, everyone, I don't know of any investment manager, any consultant, any pension fund in the market that would say sustainable investing, ESG investing, impact investing is not important to them. But what you do need to make sure is that you're clear about that continuum of, let's say on the one side, starting from proxy voting, ESG investing is a fairly common concept and fairly well established in markets and with investment managers. But if you move up the spectrum of more impact investing, thematic impact investing, like Malick was talking about, climate investing, sustainable enterprise development, there's cultural aspects of it. There's philanthropy almost on the other side of the spectrum. Where in that spectrum do you as an investment shop want to play? And to Nico's point about honesty, where can you demonstrably add value? So it is a particularly interesting period where you need to be clear about what it is you stand for. You need to make sure that you get that cultural alignment in your teams, in your staff. And also just to echo, there's almost these three forces, right? There's the internal workings of the markets and your own staff now in a COVID period. There's the presidential demands, the things that Motlatsi was talking about. You know, what are we as an industry supposed to rise up to? What is our challenge? How do we respond to that challenge? And then also make sure that clients get good value for money. So you need to be clear, DNA, anchor your DNA, anchor your philosophy, and anchor your process in something that will add value and that you can be proud of at the end of the day.
Fantastic. Is it so? You're talking about the philosophy. Is it now you just going on to the fact that it's got to be adaptable? But how dynamic would it say it should be?
Yeah, I've always been a big proponent of saying that investment philosophies need to evolve. There's a core belief system that you must always be true to and that you always can go back to when you need to make a decision or when there's doubt or when you've got different opinions, which also inevitably happen in diverse teams. So for us, having an outcome-based investing philosophy is that true north that we always focused on. You don't make a decision, you don't do a piece of research, you don't introduce a bet in a portfolio if it is not something that lends itself towards an outcome that will create an experience for the investor that is more comfortable. So it talks a little bit about what you're solving for, as Nico also raised at the beginning, and that Wells Fargo does in their solutions approach. Make sure that your philosophy and the principles of that philosophy is anchored in something that even if the markets change, even if our way of work change, even if the culture and the investment team evolves because we're in the middle of a pandemic, that the principles that you stand for and the beliefs that you're trying to solve for is still catering for a value for money outcome for a client. So it is critically important.
Fantastic. And just from maybe the last point, what are the most significant innovations and focus areas that are important for you? And how and when do they get introduced into your portfolios?
Well, let's say we've got a proud history of lots of innovation. But what I'm most proud of is it's not just innovation for the sake of being innovative. It's something that lends itself towards a better client experience. So it's innovation with a purpose, if I can call it that. If I think of the topic that we're talking about today, conscious investing, impact investing, how we think about sustainable investing, one of the things I'm most proud of from an innovation perspective is that we formulated our sustainable development goals. And it is a unique set of goals that aligns with a bigger intent and with a bigger society and the South African economy. But it also aligns with our client goals, and it's something that we can create the right solutions for our clients for. So what's nice for me is, I can think of smart beta solutions where, for instance, we created a sort of overlay strategy that will get you to a specific equity outcome. I can think of examples where Motlatsi and team have integrated student housing, infrastructure, real assets into multi-asset class portfolios, renewable energy deals. There's a whole lot of innovative ideas that are happening in that space and that we've managed to incorporate. But I think the thing that I'm most proud of is that we've completely lifted our game, and the standard for investing in momentum investments has become really centered around our sustainable development goals. How do we live a value for money proposition for clients that is also demonstrable and that also shows impact in its real sense, so that the investor can understand where their capital is allocated and what it's used for? And so in closing, let's say, for me, it's been such a tremendous day where today we can showcase the best of our talent in the investment team, but we can also show the South African market and our client base what those principles are that we stand for. We've actually, the last couple of years, spent a lot of time to make sure we cement relationships with the best sustainable asset managers globally, like Robeco, like some of the partners that you saw us talk today to in this panel. And we're really proud of what we've achieved.
I would like to take this opportunity to thank all the panelists for sharing their insights. What is clear is that our industry definitely needs to be alive to change and adapt. I trust that you've seen how dynamic our world is and how investment practitioners take future-proofing their businesses seriously. Thank you very much for joining our sessions. And to our panelists, thank you.
Thanks.